Hi, my name is Mike Dillard, and this is Self-Made Man, the podcast for those who want to leave their mark on the world and create a legacy of honor, integrity, and achievement in every aspect of your life. I'm glad you're here, and once again, it is time to forge your destiny. Welcome back. Today, we're joined by Tika Touri from PalmBeachBitcoin.com to get an exclusive update on Bitcoin and the rest of the crypto asset industry. Now, for those of you who are not familiar with Tika, this is the second time he's been on the show, and he's got an absolutely fantastic story. He actually grew up in the foster care system in the United Kingdom, and then he came over to the US at the age of 16 with $150 in his pocket and the clothes on his back. By 18, he had become the youngest employee at Lehman Brothers, and 2 years later, he shattered convention by becoming the youngest vice president in history at Shearson Lehman at the age of 20. Now, from there, he went on to start and manage his own successful hedge fund until 2013, when he retired and joined the Palm Beach team to focus on the opportunities that have been unraveling here in crypto. Today, Tika and his team put out the highest quality analysis in the crypto industry that you can get, and that's not me just saying that, that's my personal opinion because I've been a customer of his for nearly 2 years now when they first launched their publication. He was on the road going to every major event around the world last year, meeting with crypto founders and bankers, touring home offices, almost 300 days out of the year in 2017. Now, when it comes to reducing your investment risk in a new volatile market like crypto, the only way you can do that is to arm yourself with the best information possible, and that's what Tika produces. So he's here today to talk about the state of the industry, to give all of you an update, and to answer one primary question, which is the bear market over, and what's going to happen to the price of Bitcoin moving forward? Now, if you're currently invested in the crypto market or if you've been thinking about getting involved, this episode is an absolute must listen. And in fact, the day after that we recorded this interview, a huge piece of news hit the market that Tika announced. Was one of the first in the world to essentially break this news that is expected to take the price of Bitcoin from around $6,500, which is what it's at today, to more than $65,000 in the coming months. So what's the news? Well, last week, the Chicago Board Options Exchange, or the CBOE, filed an application with the SEC to open the first Bitcoin ETF. So the Chicago Options Exchange is one of the largest and most well-respected, most well-funded clearing institutions on the planet. It's up there with the New York Stock Exchange, the NASDAQ. It's one of the top-tier premier financial institutions in the world. Now, the approval of a major ETF is the catalyst that's expected to bring hundreds of billions of dollars into the crypto market. And so far, previous applications that have been filed by other smaller institutions have been denied by the SEC for a few very specific reasons. Well, the CBOE's application addresses all of those concerns and all of those objections. And, well, they're the CBOE. It's largely assumed that they would not file unless they expect to get approval. This event marks the beginning of the Wall Street money phase that Tika and I have been talking about and expecting for the past year, which means this is most likely your last chance to invest in Bitcoin at these prices. So if you want to learn more about this announcement and what it means for the price of Bitcoin, make sure you listen to today's episode and make sure that you also jump on Tika's live webinar. He's going to be holding this Thursday night, July 19th. He's going to be going through the CBOE announcement and much more in what is expected to be the largest webinar ever held in history in any industry. In fact, as of this morning, there are over 80,000 people who have already registered to attend. I think it's a safe bet that over 100,000 people will be registered for this webinar on Thursday night, because this is an opportunity of a lifetime. And if you can combine research and facts and trends with what's going on, and you can identify the opportunity that's here in front of us, it's a life-changing opportunity. So if you're in this space, enjoy today's episode and today's update. Make sure you check out the webinar as well over at PalmBeachBitcoin.com. And with that being said, please welcome Tika Touri. Tika Touri, welcome back to Self-Made Man. This is an interview that I've been looking forward to for weeks. So once again, it's an absolute pleasure to have you back here on the show. Let's see, what is it? Probably 9 months after your first interview. And there's obviously a lot to talk about when it comes to the world of crypto. So thanks so much for joining us.
Absolutely, Mike. It's a real pleasure to be here.
So I think the big question that a lot of our listeners will have. I know there's a huge number of self-made men followers here who are into crypto. You know, we had our first interview. I think, if I remember correctly, the price of Bitcoin on that recording was around $5,000 to $7,000. Mm-hmm. And we were like, hey, it's going to go to 10. And not only that, obviously, but it went to 20. And since then, we've seen that bubble pop. It's now down roughly 75, 80%. And I know there's a lot of folks who are like, was that it? Is it over? Like, where are we, right? So that's what I wanted to have you on to kind of bring people up to speed about.
Sure. It's a great question. And for a lot of people, Mike, unfortunately, that was it for them. You know, they saw this so-called bubble pop. They panicked, and many of them have sold. And I would imagine a lot of people that were involved in crypto late last year are probably not involved with crypto now. And that's really very, very, very sad. Because if you look at the trajectory of crypto, this type of volatility is really normal. It's the reason why from the very beginning when I started talking about crypto, I said, look, you've got to be rational about your position sizing because you're going to deal with a level of volatility on certain times that's honestly, it's going to make you want to vomit. It's going to be so bad. And the only way that you can deal with that is if you have a rational position sizing in place. And so the reason why I said that, Mike, back in 2016 when I first started talking about crypto, and I said it again in 2017 when I was on the podcast, is that I went back and I've looked at how Bitcoin specifically is traded, and it's just a wild ride. So, for instance, in 2011, there was a Bitcoin bubble. Bitcoin had a couple of years previous to that was trading for a fraction of a penny, and then it ran to $32. And in 2011, the so-called bubble popped, and Bitcoin fell to $2. That's a 94% retracement, right? Like, so imagine it's 2011, you got in late into Bitcoin and you bought it at 32 and now it's at $2. And imagine I'm on your show now talking about this. Like, yeah, that's a nightmare, right?
Yeah.
Yeah. So if you went out and made the mistake of over owning Bitcoin at $32 and then watched it go to $2, of course you're freaking out. No matter what I say to you about the long-term trajectory of Bitcoin, you're not going to believe. You're not going to believe that an asset that has collapsed 94% can, one, get back you to even, and two, can actually grow your money by an order of magnitude. But that's exactly what happened. You know, in early 2013, Bitcoin now runs from $2, from a low of $2 to 230, right? Oh my God, Bitcoin's in another bubble. And guess what? There were people that bought Bitcoin at 230. What happens? The so-called bubble pops and Bitcoin drops 70%. Again, you know, imagine we're having a conversation. Imagine, you know, we knew each other then. I say, hey, you know what, Mike? You got to buy Bitcoin, right? And you buy it at 230 and now it's at $70. Most people are going to be avoiding you, right? They're not going to want to take your phone call. And they're certainly not going to want to come on a podcast like this. So the reason why I'm here and the reason why I don't hide under my desk is because the biggest days for Bitcoin are still ahead of it. Every day we are reading headlines that Bitcoin is a bubble, that Bitcoin is a Ponzi scheme, or Bitcoin is a game for fools. Well, let me ask you this, Mike. Have you ever seen a bubble where if you bought it at the peak from every cycle from 2011 to 2018, 14 rather, if you bought it at every single peak and held it, you'd still be up 9.8 times your money from old peak to new peak. You'd still be up 9.8 times your money, right? So even if you had the absolute worst timing in 2011 and bought it at 32 or at 32 and then watched it go to 2, had terrible timing in 2013, bought it at 230, watched it go to 70, had terrible timing in 2014, bought it at 1200, watched it go down to 173, you'd still be up 9.8 times your money on average. Like, Mike, if that's a bubble, sign me up. Okay? Because my experience of bubbles, when a true bubble and a true financial fraud is when an asset goes to zero or near zero and stays there. What is different with Bitcoin is we have this long-term secular trend, which is up, which is comprised of these shorter-term trends that look like a bubble. You see a massive spike up, a huge retracement, a sideways period, and then another massive move up. And I think we will continue to see this type of movement in Bitcoin for many, many years.
So you guys at Palm Beach Bitcoin put out the best research that I found in the industry, which is obviously why I'm a big fan of you and your work and what the guys over at Palm Beach do. You travel more than anybody else I know in this industry, essentially seeking out answers and research on what's really, really going on. And in fact, I think you're either still in Rome or you just got back from it after being up for 72 hours straight. What's taking place in the world of crypto that the average layman doesn't hear about or know about?
Okay. So I was just in Tuscany. I got back today. I've been up essentially since 9 p.m. yesterday. I was in Tuscany for 3 days. I was invited to a special event at a medieval castle in the hills of Tuscany. 65 people got the invite. I was fortunate enough to be one of them. And so this was a group of venture capitalists, former pension fund managers, technologists, and people that have created literally billions of dollars of value in the token space. And there were a couple of key takeaways that I got. When I went through the dot-com bubble, when the dot-com bubble popped, there was an exodus of talent from the internet area. Everybody left technology and they flooded to other areas. They went to biotech, they went to Wall Street, they went to other areas. Whereas if I look at this market, what I noticed was, okay, yeah, we're down 70% across the board, and yet more talent continues to flood into this market. I see more and more people ditching very promising careers at major firms to come into this space. So that right there was something I noticed right off the bat, right? This incredible influx of talent still coming into the market. And then the next piece I noticed is the enormous amounts of money that these VCs are able to raise. Now, again, I looked at the dot-com bubble. When the dot-com bubble burst, you saw a 90% reduction in venture capital money coming into the space. If we look at the crypto market, which again is down about 70%, the amount of money coming into the space so far has doubled what came into the space last year, and it's expected to 4x by the end of this year, 4x what came in last year. And that is just remarkable, because this is not mom and pop money. This is family office money. This is venture capital money. This is ultra high net worth, very, very, very smart money coming into this space. So I was sitting down with young VCs. I'm talking about their mid-20s that have had no problem raising $30 million, $20 million in the middle of a market that's down 70%. That's incredibly bullish. So there was that piece. And then the other piece that really got me very excited, and I have to be careful here because this person wants to remain anonymous, and I understand why they want to remain anonymous because of their position in the industry. But this person used to oversee a state pension fund that was in the tens of billions of dollars. And he and I were talking about institutional money. And I was saying, what's the framework for state pension fund money to actually come into the marketplace? And he said, Tika, look, what you've got to understand is that a state pension fund is not going to buy cryptocurrency directly, right? It's just too risky. You've got a cushy job at a state pension fund, Mike. Let's say you buy Bitcoin, it goes down 70%. You're getting fired, right?
Your only job is to not screw up.
Yeah, that's it.
That's it, yeah.
That's it. So I said, well, what's the solution to that? He said, well, Tika, again, they're not going to buy it directly, and they're not even going to invest in funds to buy it directly. So I said, so how are they going to come into the market? He said, Tika, what the mechanism that they're going to use to get involved is something called a fund of funds. So with a fund of fund, the state pension fund can buy into a fund, and then that fund invests in other funds which happen to invest in cryptocurrency. Now, isn't it the same thing? Yes, it's the same thing. But apparently in the world of, CYA, which is, cover your butt, that gives them the cover they need in order to come into the space. And so this particular individual that I was talking to has just deep ties within the space and has actually left the space directly to go out and launch this type of vehicle to start aggregating state pension fund money. And Mike, that is another level of buyer that, we can't even wrap our heads around. State pension funds are controlling hundreds and hundreds and hundreds of billions of dollars. So to be able to have a vehicle that allows that capital to come into this market is incredibly bullish. Now, of course, the number one question I get is, well, when's that going to happen? Or this news is out. Why aren't prices going right up right away? That's just not the way things work in the real world. We are seeing prices starting to firm up and prices are starting to get better. But remember, when you are talking about institutional sized capital, right? Truly elephant sized capital, it moves slowly, right? It doesn't move on a dime like a hedge fund, but it is moving. And that's why I think as an investor, you have to focus on the trajectory of everything that is coming together around this ecosystem. And the trajectory is supportive of much, much higher prices ahead, Mike.
Yeah, I mean, I completely agree. And I've been telling a lot of my crypto fans, if you will, here that I hope the prices go down a little bit more for a little bit longer. I would love nothing more than to get 3 or 4 more months of an accumulation opportunity at BTC 5,000, even 3,000. I would be thrilled.
I would be too. BTC 3,000 would be Christmas and summertime. I don't know if we're going to see it.
Yeah.
And I know a lot of people would really freak out if that happened. But to me, it would be the same opportunity that we saw in 2011 when Bitcoin went from 32 to $2.
Right.
Right. I mean, that's just, yes, to sit through that, it's horrible. But again, if you can have the bigger picture around this asset class and where it's going, then you look at opportunities like that and you say, my goodness, that's a life-changing opportunity. You don't have to buy a lot of Bitcoin at $2 to change your life, right? When it was 32 and going down to 2.
Right.
You also don't have to buy a lot, I think, if it goes to 3K. I don't think it's going to go to 3K, but if it did, you wouldn't need to buy much,
right,
for it to really move the needle on your net worth.
The one area that I'm super, super excited about that we haven't really seen a lot of activity in yet, because I think there's a lot of regulation that is taking place right now before it does, is the tokenization of securities. Mm-hmm. I think that is probably the area that excites me most. If you could give us kind of an overview of what you see taking place in that area right now.
Yeah, so there have been a lot of, so let me just explain what that means to the audience. So a typical security, so let's talk about a stock. We buy 100 shares of Walmart. So typically when you buy Walmart, there's this whole mechanism that goes on in the background. So somebody has to prove that I have the money to buy the Walmart shares. Then somebody has to prove that the person that's selling me the Walmart shares actually has them. And then the physical shares have to be moved from the name of one brokerage firm over to the name of another brokerage firm. And that takes days to do that, right? Like 3 to 4 days to actually settle that transaction. And it's based on the same way of trade settlement that we've been using for over 100 years to settle stock trades. It's ludicrously inefficient and extremely expensive. And so, the promise of the blockchain is that you can move these securities to a tamper-proof blockchain. So it's immutable. We can know specifically who owns what share, what stock. And then so when you come to the market and you do a transaction, it's instantaneous. There's no delay in clearing the trade. The trade will clear immediately, which doesn't happen right now. So one area where I think we will see tokenization take place is in traditional equities. We'll also see the rise of the so-called security token, which is a digital token which the SEC considers to be a security. But a third area where I think, and for me, what I'm really excited about, Mike, in terms of security tokens, is issuing tokens on assets that are normally illiquid. So a prime example would be venture capital funds, right? When you put your money into a venture capital fund, it's locked up for at least 7 years. You can't borrow against it. You can't monetize it in any way, shape, or form. So being able to tokenize my share of a private equity fund's exciting, right? I can borrow against it. I can use it to buy other assets. I can have liquidity on it before I have liquidity in the fund. So I think that's very exciting. And then also the tokenization of real estate. Mm-hmm. So right. Being able to have, let's say, a 500 unit building and being able to have tokenize the whole building down into, let's call it, $100 sized tokens, where the rents are being collected. There you have an oracle collecting the rents, putting the money into a smart contract, and then the smart contract, paying out the token holders. I mean, that's an incredible way to bring liquidity to a highly illiquid asset, right? There's trillions of dollars worth of real estate that just sits there. This asset doesn't do anything. So you by tokenizing these assets, you would have more liquidity, and you would have more people that would be able to participate in a great real estate deal, which right now they can't. They've got to be an accredited investor to do so. So one more point I would say about this is that there have been a lot of exchanges that have sprung up that are trying to be kind of de facto platform for trading security tokens. And I'm sure some of them might have some success over the short term, but I think over the longer term, I think Wall Street is going to end up being the leader in security tokens, right? It'll be NASDAQ, it'll be the NYSE, it'll be ICE, because they have the frameworks in place to be able to process those trades. They have the relationships, and most importantly, they have the trust. Right, they have the trust and the capital. So I know there are a lot of projects out there trying to be this go-to platform for security tokens. I don't own any of them. I know a lot of the guys that run those platforms. They're great people, but I think ultimately Wall Street's going to eat their lunch.
Yeah, it's going to be interesting, but I'm super excited about that, and just the opportunities from a global standpoint. Like if we can get that stretched around the world, and you can just jump on an exchange and buy part of a hotel in Shanghai or whatever, like that would be amazing.
Amazing. So,
yeah, absolutely. Well, what do you think we need to know here that we haven't covered so far today, given where we're at? It's the middle of July 2018. What do you think everybody needs to know right now?
I think the best advice I can give everyone here that's listening that has exposure and is worried, the best advice I can give them is to enjoy your summer. Take a deep breath. Enjoy your summer. Enjoy the people around you that give you joy, right? It's honest. Sometimes, Mike, the best thing to do is nothing at all. In 2011, when Bitcoin went from 32 down to $2, honestly, the best thing anyone could have done was to not look at prices and go spend some time with their family or their loved ones or their wife or their girlfriend or their husband, and just not worry about the day-to-day volatility of the market. And it's probably not the advice you were expecting that I would give, but I have seen more money lost over my almost 3 decades in finance, more money lost through panic than through just unplugging and doing something, more pleasurable than worrying about prices.
Yeah, I completely agree with you, and we've talked about many times. If you're feeling anxious, or if you're looking at the prices and having a negative emotion instead of a positive one, it means you've put too much money in.
Yes.
So we have a rule that we call Vegas money, where I've got 3 or 4 of my best friends here in Austin who have all are all in this space. A lot of them bought in for the first time last fall when things are getting exciting, right? So they've all taken a hit, but we came up with an agreement from day one. Hey guys, it's Vegas money, right? Like, we don't ever want this to be an issue between anyone, because it is a very, very, very volatile market. And if this is a point of stress for you, then you shouldn't be in this space right now. So I think that's sign number one. And second, I would just encourage you to reframe how you're looking at your portfolio. And you have to really ask yourself one question. Do you believe in the long-term potential of this industry over the next 2 to 5 years? And if you do, and you're bought in and you understand why, then I would start to look at the red in your Blockfolio app or whatever you use to track as an opportunity. And for me, I wake up every day and I'm like, gosh darn it, I want it to go down 10% on this particular asset because I'm looking to buy in and I want it to go lower. And so for me, that if you're thinking about it that way, I think you're going about it the right way, rather than getting pissed or concerned or worried or whatever it may be, because that's the mentality of an unsophisticated investor who's gambling versus someone who's approaching this world with a bit more, strategery, if you will, and forethought and patience. So
I would agree. And the other thing I would say is if you have not participated in this market yet, now, if there was ever a time for you to get involved, now is the time for you to get involved. This is just an incredible opportunity. If you are brand new to crypto, if you've been thinking about it, but you thought it was overvalued, these types of drops down to this level, since 2011, this is only the 4th time this has happened, right? So this is an amazing buying opportunity if you're new in the space, and you should absolutely take advantage of it.
What's going to be really unfortunate is that a lot of the people who bought in at 15, 20K and then who capitulated and sold at 6 or 7 are going to buy back in at 15 to 20K.
That is sad. That is sad. Now, just let you know, I own some Bitcoin at 16K. I own some Bitcoin at 18K.
Yeah, I do
some
too.
Bitcoin at 20K. Right. So, and I'm not panicking about that because, again, I didn't cash in my kids' college savings fund to go buy Bitcoin at $16,000. Right. I've always said never invest more than you are willing to lose. And the beauty about where we are right now in this market is that the market is still so small that you can take this so-called Vegas money and put it in this space, because we are sub 300 billion. And by the time this is all done, right, by the time this is a mature asset, this asset's going to be worth trillions and trillions of dollars. So it's very rare when you can get into an asset class when it's small and when it's new. But when you can, you want to participate, because that's the only time where you can take a small amount of money and turn it into an enormous amount of money. The last time I saw that type of opportunity, Mike, was in the late 80s and early 90s in technology, right? Because the technology markets were tiny. This was a new asset class, a new investment class. Tech had only been around really since public tech since like 84, 85. So it was very, very new. And then, in between 1990 and 1991, the average tech stock fell 50, 60%. Stuff like Oracle fell 85%. And I remember going through that and how difficult that was. But it was the single greatest buying opportunity in tech in my career on Wall Street. And I'll share this story. I had gotten scared out of 2 very important positions, Microsoft and Oracle. And I had a little bit left, but not much. And, I did the math. If I had kept my position on by the end of the decade, I would have had $20 million in those 2 positions, Mike. $20 million.
Yeah.
At 28. Right?
Yeah. Right,
so 20 million at 28. I'm 47 now. I mean, that, talk about a rocket boost, or another 20 years of compounding that I missed out on.
Yeah, completely agreed. Before we forget, I wanted to also have you talk about the innovations that are taking place within Bitcoin itself, BTC, because when we saw the bubble in 2017, that kind of volume and activity really made the kinks in the armor apparent. Let's just say from a speed of transaction time, right? It might take 6 hours for a transaction to go through, and the network is clogged, and same with Ethereum, and the whole thing's just a shit show, and it's just a mess, right?
Yeah.
And so that was one of the big points of contention with all of the naysayers out there, which is that this will never go anywhere. This is never going to be a viable means of transactions, at scale and at volume that people keep saying it's going to be. But what they're not really acknowledging is the fact that the technology that runs Bitcoin is not staying the same. And you mentioned this briefly a couple of weeks ago, but could you talk about some of the innovations that are taking place within BTC right now?
Yeah, absolutely. And what people need to remember is that, exactly, you said it perfectly, BTC is not static. Bitcoin is a technology. And so in 1992, when the internet first came out, people said, yeah, this is ridiculous. It takes 20 minutes for a picture to show up. People are talking about streaming movies. That can never happen. You can't put movies through copper lines, right? So I remember the same things, people saying the same things about the internet. I remember, AOL was really the way that everybody was using to get online, and it would sometimes take 2 hours to get online. And then when you did go online, if somebody called you on your telephone, because that's how you access the internet, you'd lose connection, taking another 2 hours to get on. I mean, it was a nightmare using the early internet. And people similarly said, this technology is worthless. And what they forgot was that the people that are in the technology are constantly improving it. And so there are two things occurring right now in Bitcoin that are going to really propel the technology to a level that is on par with what happened in the internet when we went from dial-up modems to cable modems. Now, that took 10 years, Mike, to go from dial-up modems to tape before cable modems really first started to come out, and they were super expensive. But once you had broadband, what happened? You now had these transformative applications that you could do on the internet. And the modern day internet, as we know, couldn't have happened without broadband. So what's the other word for broadband? It's scale. All of a sudden the internet could scale. And so this is what's happening now in Bitcoin. And there are two key technologies that you need to be aware of. So one is the Lightning Network, it's called a second layer solution. It sits on top of Bitcoin. And what it allows Bitcoin to do is scale. I'm not going to do a deep dive on the tech. I would definitely recommend reading about it. But what Lightning does is it allows you to do thousands of transactions per second. It provides anonymity, and most importantly, it manages costs. It takes the cost of a transaction down to a millionth of a penny. When we were going through this kind of crazy Bitcoin boom late last year, I saw fees go up to $50 on a transaction. You'd move $20 worth of Bitcoin and it cost you $50 worth of Bitcoin. It's insane. So imagine now you go from that to a millionth of a penny, which is essentially free, right? It's essentially a free transaction. So we have the Lightning Network. And then the second piece we have is what's called RSK. And RSK is a platform that will allow Bitcoin to support smart contracts the way that Ethereum has smart contracts. And a smart contract is just a way of creating an executable program based on certain parameters being met, which, up to this point, Bitcoin has been unable to do that. So with the emergence of RSK, so you can now do these complicated smart contracts. And then with the emergence of the Lightning Network, where transaction costs are essentially getting driven all the way down to virtually zero, what you now have is a fertile development environment for Bitcoin. For the first time, Mike, you can build apps that can scale on the world's most secure blockchain. And I've always said, if you're trying to identify what drives value of a coin, it is usage that drives value. So if you now have the protocol is now developed to the point where you can build applications that can scale, what it means is that you are going to see a sharp increase in usage of the Bitcoin network. And that is incredibly bullish, wildly bullish for the price of Bitcoin.
Yeah, absolutely. I think it's just underappreciated right now because most people don't know about those things.
They don't.
What does that mean for Ethereum? Because Ethereum's running into the same scale issues, right? It just kind of came to a halt the other day for like 5-6 hours. Are they making progress when it comes to those challenges as well?
They are. It's going to take some time because what they want to do is transition over to proof of stake away from proof of work. So proof of work is when all the nodes or all the computers that have a copy of the ledger compete to solve a mathematical puzzle, and whoever wins that puzzle, they get a reward of Ethereum. That's the proof of work. Proof of stake is where you have to put up a certain dollar volume, certain dollar amount of Ethereum, and then you provide consensus that way. And if you are found to be a non-conforming node or a dishonest node, then you would lose your staked amount of Ethereum, which I think, depending on the price of Ethereum, is $1 million plus. So they're working on that process, but it's going to take some time. But again, just the same way that we had to have the faith that people would figure out a way to make the internet scale, you have to have the faith that people will figure out a way to make Ethereum scale. And I've got to tell you, Mike, you want to talk about the amount of brains that are aggregated around one project? It's unbelievable how many smart people are devoted to solving these problems. And they will solve the problems. And in the interim, I think it's creating a tremendous buying opportunity in both Ethereum and Bitcoin.
Absolutely. Well, Tika, I really do appreciate you coming online and kind of giving us an update. I know later this week, just a couple of days from now, on July 19th, you guys are doing another really big webinar, this time with Glenn Beck, which is interesting. But that's going to be live on the 19th over at Palm Beach Bitcoin. What's going to take place on that webinar?
So I have a habit of talking the most about Bitcoin and about cryptocurrencies when cryptocurrencies are really hated, right? Because I think everyone should have at least a little bit of Bitcoin and a little bit of cryptocurrencies. And so I saw this incredible opportunity with the market down as much as it is. And, Glenn Beck has this huge audience. And I just wanted to do everything in my power to get this message out to as many people as I could. People that have probably never even thought about Bitcoin or cryptocurrencies before, because the timing is right. It's like being able to go back in time in 2011 when we were down 94%, or 2013 when we were down 70%, or 2014 when we were down 85%. And then, to have such a big audience the way that Glenn has, to be able to get in front of that audience and say, hey, this is a rare opportunity we have right now, and you got to take advantage of it. When prices are down, Mike, most people hide under the table. But I kind of get out there and I say, look, this is an opportunity. We got to take advantage of this, because it's we're not going to stay down here for long. And when we do recover, unfortunately, what will happen is that people that could have bought now at $6,000 or $7,000 worth of Bitcoin, they'll think, oh my God, it's at 10,000 Bitcoin. Oh, I missed it. Then it's at 12,000 Bitcoin. Oh, now it's done. Then it'll go to 18,000 Bitcoin, and people will start buying it. And then what happens? Maybe we'll go back down to 12, right? So I'll leave your audience with this one little tidbit. When things are emotionally easy to do, like buying a stock or buying an asset, it's probably a bad idea to buy it. When things are emotionally difficult to do, when the idea of buying something makes you feel like throwing up, whether it's buying a stock or buying a cryptocurrency, because you think, oh my God, this the news is just so terrible. I can't buy it. It's probably a good time to buy the asset. And I have used that test on myself again and again over the years that I've been involved in the financial markets, and it just works like a charm.
Yeah, it's the whole Buffett thing: buy when there's blood in the streets, right? And that's I've finally gotten a chance to see that in this space, 3 times since 2013, and I get it now. And it took this industry for me to see it several times and then understand it and really value that, and like, okay, I see how the game is played now. And it's been a really cool epiphany because it's tough. It's tough to watch people get in and have FOMO and buy in at the top of something, but I think it's a lesson everybody's got to go through at least once or twice. In my case, probably 3 times before I figured it out with my stock trades and gold and all of that other stuff, right? So I'm glad I finally got there, and I hope a lot of our audience and listeners will take heed of your advice here today as well. Well, Tika, I think we've covered a lot. I know you're going to cover a lot more on the webinar. And man, thank you so much for joining us today. Obviously, everybody can go learn more about your newsletter at palmbeachbitcoin.com and to check out the webinar as well. I've already said this in the first interview. You guys know I've been a customer of Tika's newsletter here for, I think 2 years now, or since whenever you guys launched it. I've been friends with Mark Ford and Tom Dyson over at Palm Beach for, over 10 years now. And you guys just put out the best research in the industry, period. Like, I haven't found anybody else who comes close to what you guys do. So thank you for your hard work and for coming on the show today. I really appreciate it.
Mike, thank you. It was a real pleasure to be here. I really appreciate you. Thank you.
Absolutely. Well, guys, gals, thank you so much, as always, for listening. Make sure you go check out Tika's webinar coming up on July 19th. I'll put a link in the show notes, or you can just go to palmbeachbitcoin.com to register. And every time Tika talks, when it comes to this space, I listen, because I haven't found anybody else out there who knows more than he does from a boots on the ground perspective. So thank you so much, and we'll see you soon. Take care.